Hi guys, so on this video I'm going to help you understand regarding gold. Now gold has been one of the best performing assets in the last 3 to 5 years, I would say. In fact, this year itself it has given exceptional returns. Now many people might have missed this rally, so they would be thinking that should we go ahead invest in gold. Many of you might be thinking should we book profits on gold. Many of you would be wondering what's the point of stock markets if gold itself is giving so much returns. So on this video, I'm going to deep dive on gold analysis and will give you a perspective whether or not you should be buying gold, whether or not I'm buying gold. So I'll break that topic apart for you. So first things first, take a look at this chart. And this chart is very interesting. It compares gold returns to other asset classes. Now, what I've done is that I've compared gold on 1 year, 3 year, 5 and 10 year timelines. Now, I'm not going like 50 years back and all that stuff because after 2008, the world of investing has changed dramatically. So I'm just looking at a decadal viewpoint. Now, if you take gold and compare it to, let's say, Nifty 50 or S&P 500, which is a US index, NASDAQ Composite, which is a US tech company index, I would argue, and Bitcoin. So these are primary asset classes against which gold should be compared. So if you consider this, you will see that on a 1 year basis, gold has done exceptionally well. It has beaten Nifty 50. It has beaten S&P 500. It has beaten NASDAQ Composite. It has beaten Bitcoin. So the last 1 year has been exceptional run up for gold. But if we extend the timeline, so 3 year basis, it's 13%. So okay, fine. It still beats Nifty 50. Does it beat S&P 500? No. Right? Does it beat NASDAQ? No. Does it beat Bitcoin? No. Now, again, if we do this analysis, so Nifty 50, like almost on all time frames, it has beaten, right? So this has been beaten. But if you compare it to S&P 500, sometimes it has beaten, sometimes it has not beaten. NASDAQ, it has mostly not beaten except for the last 1 year. Bitcoin, it has mostly not beaten over the last X number of years. Okay, so this is the analysis. This is the piece of data that you need to keep in mind. Now, historic bias does not mean that in the future also gold will perform exactly that, right? So for this, a natural question comes that will the gold prices keep on rising? Now, in order to understand this question, you need to first ask, why is it that the gold price went up in the first place? So if you look at the last 3, 4 years, some key changes have happened. Number one thing is that many countries like Russia and China ended up buying a lot of gold. Now, when we say Russia and China, it was not as if that their households were buying. It was their central bank slash government, which was buying gold. Now, this gold buying by the central governments spiked the demand for gold. Now, if we go back to basic economic chart, which is called a supply and demand curve, this is what dictates the price of any asset, right? So supply curve is drawn like this, demand curve is drawn like this. Now, if there is a dramatic increase in demand, right, that demand has gone up, then what will happen to the price of the asset? So this intersection point, so this is price one, right? This defines the price. But if the demand is going like this, right, up, so then this becomes price two or P2 or price point two. Now, this is what, like speaking from a macroeconomics point of view, will dictate the price of any asset. And over the last 3, 4 years, what has happened is that a lot of demand from central banks has spiked. Now, natural question comes that, okay, why is it that countries like China and Russia started demanding more gold? Well, in 2022, when Russia-Ukraine, or 2021, when Russia-Ukraine war happened, the US tried to exert its power on Russia, right, and kicked it out of the international settlement system, which is called as SWIFT system. So then Russia and US had a lot of mistrust, right, and Putin being like a strong arm leader or whatever it is. I'm not getting into politics, but basically his viewpoint was that, see, you know what, that Russia is a locally self-sufficient economy, and in order to be truly self-sufficient, we are just going to figure out a system where we don't have to depend on the US dollar. China is smart, right? China hasn't abandoned, one could say, the US dollar trade settlement system, but China is also hedging its bet against the US dollar. So many countries like China, Russia ended up doing it, and it increased the sudden demand of gold. Now, this can be seen from this chart also. So for example, if I just take you to this chart, so you will see that up until 2016, 17, 18, even till 2020, that there was not a massive spike in the demand of gold by central banks. Okay, so central banks, if you go and check how much demand is there for gold, then in 2016, 17, yeah, 2020, right, it was around, like, let's say 500, 600 tons. Okay, so this is what was being demanded. But if we go back to the last 3 years, 2022, 3, 4, every year there has been more than a 1,000 ton. So almost 2x demand for gold. Now, if there is 2x demand for gold, of course, the gold prices will also double. And that is exactly what has happened in the last few years. Okay. So even this year, the demand for gold has been very high from the central governments because of US trade war, which has again accelerated a bunch of points. So a natural question comes that, hey, in 2026, 2027, what would be the growth triggers for gold? Now, honestly, I don't see anything because if you again go back, study the history from 2021 to 3, 4, 5. So what has happened in this roughly 4 year window are two things. Number one is that a lot of money has been poured into tech stocks, right? So in 2021, for example, a lot of money moved into tech. Companies like Nvidia ended up becoming the poster child of the stock market. Now, these companies were doing exceptionally well in 2021. Then in 2022, there was a massive price correction in tech stocks. Now, as a result, what happened was there was flight of safety. But in 2022, because US has kicked out Russia out of the trade settlement system, which is a SWIFT system that I spoke about earlier. Investors thought, like, oh, you know what? Okay, we are moving out of like US tech stocks. Usually we will go to US bonds as safety, but US can't be trusted. So they started buying gold. So this was the trigger in 2022, 2023, so on and so forth. Then came Trump. There was another push that he gave, which was the trade war, right? So this was the second push that was given to the world or central banks across the world to buy more gold, right? So both these were very clear triggers. Therefore, the gold price is jacked up. Now you can very well make an argument that, okay, something similar might happen and there will be a third trigger for gold price increase. What could that third trigger be? So, well, the short answer there is that if there is a massive correction of AI bubble, which people believe there is. Some people say that it is not. Some people say there is. I've done a video. You guys can go and watch it and figure out yourself. And if you think that there is an AI bubble or not. But long story short, what is happening is that if there is an AI crash that happens, then again, there will be a spike on gold prices. So this is the investment thesis of gold. Am I investing money in gold right now? Short answer is no. Okay. So now why am I not doing it? So for this, you need to understand that what type of investors should be buying gold, right? So it really depends on your investment profile. Now, to understand this, you need to understand two things. Number one is that what is the gold forecast? That what is it that analysts and central banks across the world are seeing as the potential gold prices? That's one. And second is that what type of an investor you are. So I will take you through both these points. So here are some estimates that have been done, right? On a 1 year basis, it is expected that gold from this point is likely to go between 5 to 12%, and rationale has been given. So the central rationale for this 5 to 12% increase is very simple, that hey, gold has already given a lot of run up. So for example, if you check it on the technical chart, right, what you would notice is this, that this has been a massive run up, right? So there is going to be a mean reversion, right? So this is, we are here, we are at an all time high. Now a pullback is very likely. Now how much pullback, no one knows. And therefore, despite having that short-term bullishness, the estimates are between 5 to 12. I kind of agree with this, right? So this is what the maximum upside that I see. Of course, I can be wrong. Of course, these estimates can be wrong, but there is a rationale to this. Okay. So this is one. Second is that if you look at it from a 3 year basis, so this is going to be 6 to 8% run up. This is what banks are projecting. And here my thesis is very simple. That see, I do not believe that we are in a tech bubble, okay, or an AI bubble. Reason is that the corporate earnings are expanding. Now, this does not mean that the markets will not do a 20% drawdown or something like that. That can always happen. But generally speaking, companies like Nvidia, AMD, Google, Amazon, all these top 10, 12, Broadcom, Palantir, all these companies are likely to do well going forward, right? Now, why is that the case? Because US has started to cut interest rate. There is a lot of space for US to cut interest rate. Every time that they cut interest rate, at least on a year and a half basis, that's the maximum fall in the stock market that you can see. So there can be a little bit push, but over a 3 year period, would I say that the US stock market or US tech investing is better? Yes, compared to gold, it's better. It is likely to generate more returns. I'll show you the data also. Okay, so stay with me. But anyways, let's quickly complete the analysis on a 3, 5 year, 10 year basis. It doesn't look that gold is going to appreciate too fast, right? So these are the estimates that have been done by people. This is not done by me, but I kind of agree with this analysis. So now comes that, okay, you are saying that, okay, gold might not run up too much, but is gold right for me as an investor? Because you might have a different risk profile. So first and foremost, I will divide investors into three classes for whom buying gold might or might not make sense. So first are called as gold bugs. Okay, so they only buy gold. Okay, so they are very happy right now that gold has given a run up, all that stuff. They might be telling you, "Kya stock market mein laga rakha hai? What's the point of investing in the stock market? Just go and buy gold only." See, guys, basically what ends up happening here is, and just think about it logically, that if you only buy gold, now gold is at an all-time high. if you sell it, what will you do with it, right? What will you do with that money? Versus someone like me who is diversified. So, for example, I might see Bitcoin at a consolidation. And if tech stocks have gone up really high, now I might pull some money out of tech stocks and put it in Bitcoin, or vice versa. That Bitcoin has given too much run up, then I will pull that money out and put it in like tech stocks or whichever stocks I'm comfortable putting money as. So, this capital rotation is a big challenge for gold bugs. Now, if you're a gold bug, you have no other option. My advice to you is that please diversify. Don't go ahead and buy more and more gold. It doesn't help, because even when gold is at an all-time high, what you will struggle to book profits and move that money elsewhere. So this is a prime challenge that people do not understand or appreciate. So yeah, so that's my point to you. Where can you rotate? Maybe silver. If you're a gold bug, then silver can be a hedge, right? Or it might or might not work for you, but that's something that you can study. Okay, so this is one. Second category of investors would be people who buy other fixed supply assets. For example, I am a real estate investor also. I buy Bitcoin. So these are some fixed supply assets that I own. For example, I own high quality villas. बहुत लोगों ने मजाक बना रखा है कि गोवा में प्रॉपर्टी डूब गई दिस दैट, भाई आई ओनली बॉट इट इन अ 5 kilometer radius in South Goa. My properties are doing exceptionally well. There is no problem. I'll make an updated video on that also. So long story short, this has been the situation there. But again, coming back to the topic, that because I'm a diversified investor, I already have a lot of fixed supply assets, right? Like, for example, land, plot, villas, real estate. And I also have Bitcoin, which I have aggressively invested into, and it is doing well. And again, take a look at this chart. So over a long frame, usually Bitcoin will beat gold, right? So this is where we are. Now, third type of investor are pure stock market investors. Now, many of you would be looking at your Nifty 50 returns and saying, wondering, yeah, itni risky, like, faltu ki. No point. Like, even on a 10-year basis, Nifty 50 is not beating like gold. What's the point, right? So it's the better, like, 20%, 30% we'll put in gold only. So you're right and you're wrong. Okay. Why? Because you have to understand the nature of Indian stock market. The nature of Indian stock market is not trading. Now, many people get pissed off at me when I say this stuff. Take a look at my portfolio. This is my US stock market portfolio. It has outperformed every single mutual fund out there. Why? Because it was commonsensical to invest money in like tech stocks, like at the start of the year, especially when a crash came due to trade war, right? So at this juncture, right, in macroeconomics, you have a broad call to make as an equity investor. Number one is that if you're buying equities, time the tech super cycle. We are in a tech super cycle. If you don't own tech stocks, I don't know what you're doing. Okay, so this is like one. आप फालतू की consumer stocks ही उठाते रहोगे तो like there's no return to be made. Okay, so I'll make a separate video on this topic, by the way. With Indian investors who call themselves investor, the problem is that bhai, India market is a trading market. Government wants you to trade because that's how government makes money. If you just buy and hold in a low growth market, not much growth will come. Okay, so let me give you an exercise because some people will get pissed off on this. Okay, let me give you an exercise. Tell me like 5 Indian companies, large caps, which are growing at 20% plus CAGR over the last 5 years in US dollar terms. Just write down the names. Okay, if you can figure out five, yeah, then you know which companies to invest in. You'll have a hard time figuring this out. This is a fact. Just go and check it, right? I mean, you don't need to trust me or anyone and all this. ये तो आप exercise खुद ही कर सकते हैं, right? सिर्फ एक ही data point तो देखना है. So, okay, so what should stock investors do in terms of aggregating gold? So they should think about gold as a hedge. For example, I own ton of tech stocks right now. Okay. Now my portfolio will have a severe drawdown whenever next tech correction comes. It will have like a 20-30% drawdown easily. Okay. Now, if I want to hedge it, then having gold makes sense. What proportion, when will you buy it, and all that stuff, I'll anyways commentate on my US community. So long story short, yes, gold I can pick maybe like 5-10%. Maybe I will add on a drawdown, right? So for example, here is gold, right? It does not make any sense to own it here. But if I see that there is a pull down, right? Or if there is a consolidation, for example, this was a consolidation. Okay. This was a pull down, right? So if I get an opportunity like one or two, then I will add a little bit of gold as a hedge. That's it. Okay. Other than that, no. Okay. Now, before I close the video, let me also share an interesting data point with you, because many of you will get pissed off that, okay, no, how dare you say that, okay, gold is not going to be that good and all that stuff. Because see, guys, I'm primarily a tech investor. Okay. I'm putting a lot of money in tech. And if you take a look at tech stocks and compare gold returns to top tech stocks, the returns are amazing, right? So here is 1, 3, 5, 10 year returns of top 20 tech stocks. Now, this bucket will keep on changing, right? Because as a company grows, for example, Palantir grew and it came into like, top 15, right? So, of course, its market cap increase. So, there will be a churn. But if you take the weighted average of top 20 stocks, you keep on monitoring every month what are the top 20 stocks, and you do a basket and you invest it that way and compare the returns. So, here is the scenario that in the last 1 year, top tech stocks have beaten gold. In the last 3 years, again, they have beaten gold. On a last 5 year basis, again, they have beaten gold. On a 10-year basis, the performance has been 2x of tech stocks. So I feel that on a decade basis, this equation will favor tech stocks more aggressively. So I'll be a tech investor more. I will simply use gold as a hedge. So yeah, quickly summarizing that gold has done exceptionally well. If you're a gold bug, great for you. Number 2 point is that don't get excited by gold. If you're a stock market investor, it's okay. Some cycles come. You should be timing tech cycle and just take gold as a hedge. So this is my summary point for you. I hope that you enjoyed this video. If you did, do press the like button and I'll see you soon.